and welcome out to our show here on a Thursday, August 26, 2021. It's Tackle Trading's halftime report, where we're going to go through these markets one step at a time, breaking down the charts, the news, the information, anything that's impacting financial markets today. I give you guys some analysis and insight so you can better run your daily routine. And welcome out to our program. If you're a veteran of our community, hashtag Team Tackle right in the chat. Start the chat going on as you guys always do. I'll be monitoring it and watching that. Love seeing the way that you guys go back and forth with each other. If you're brand new to the channel, click that subscribe button, click the bell, come back and join us on a daily basis. And as you're coming on into the show, give us a thumbs up. Let's help get the word out on the program. Let's bring the coaches in here for today. We got Coach Greg Old Money Holmes, as always, on his Thursday appearance. How you doing today, Greg?
Doing well. Enjoying the day.
Great to have you here, my friend. Mark is back. Mark, how you doing, sir?
You know, it's been a rough week physically, and I haven't got any rain in Utah. So, you know, old man sick and complaining about the weather. So there you go.
Crotchety old man Mark right now. Dude, listen, second it rains, it'll make you happy. You're already on the mend. I can tell you got a lot more energy. It's great to have you here. Matt, how you doing today, sir?
Doing absolutely fantastic and not ready to complain about the rain.
Of course not. No, well, you might be complaining about some of the mixed messages in the market.
Inside baseball. We've had a few conversations about the rain lately. That's all.
Dude, yeah, people like talking about the rain.
They do. When they have nothing else to talk about, they do like talking about the rain. Yes, this is accurate.
That's right. All right, let's get down to market analysis here today. Yes. What we're going to do in today's show, we're going to break it down from the top as we always do. Jackson Hole Symposium is starting. We're starting to get some Fed chatter out of, prepared speeches and different appearances around the country. Saw some things out of Bullard and others here today. I want to get Matt's take on that. Obviously, we're going to be running another game of buy one, hold one, and dump one with Coach Greg Old Money Holmes. Found three different companies from communications, from what I understand. We're going to analyze the fundamentals of that, of those three companies. I'll break that down a little bit later in the show. We also have earnings roundup as well. I know a couple of companies, including one of my favorite, Salesforce.com, posted yesterday after the bell. Had a nice little report there. We'll analyze all of that in today's show and more. Maddie, where do you want to start here?
Earnings roundup?
You want to do it?
No. Let's start in the S&P 500. Very quickly, the last 3 days in the market has been a little bit of consolidation. As the defensive nature, I don't have a lot to update technically on the market today. Quite frankly, you're looking at a little bit of hesitation the last couple of days in front of the Fed. I do think this is to be anticipated, so I don't think this is too surprising. After, again, like we talked about on Monday, after 4 days, good recovery following that 50-day moving average bounce in the face of some fairly important conversations we've been having, such as tapering talk and the Jackson Hole event that's happening and started today. You could see some market hesitation before we start to get some clarification from the Fed on exactly what the Fed's position on tapering is.
Mm-hmm. Mark, what about you? How are you reading the market here today? Obviously, we had a nice bounce off the 50 last week. Matt's highlighted kind of, the consistency of those technicals. Now we're up at the high. We're hesitating on the first day of a Jackson Hole Symposium. Kind of all makes sense to me. What's your read on the market here?
Well, I mean, and it's not so unsurprising when you go back. You've had a couple different responses when you've had those bounces off the 50, and one of the scenarios you ran into from technically when you look at the S&P this year is it is not unusual for you to bounce and drift sideways. I mean, just look at the most recent bounce we had, right? Came down to the 50, rocket up, right? And then take some time. Those moving averages held, acting as support, but took a couple weeks off, following that bounce. And so, the bounces, sometimes you go up a couple legs before trading sideways, but it wouldn't be unusual, especially ahead of an event. What I like the most, though, is that when you start to reset these technicals, you go down, bounce off the 50 or whatever moving average or support zone you bounce off of. Then as you start to climb up, those moving averages start to upslope again. You're seeing that 9 start to upslope. You're starting to see that 20 upslope. So I call this resetting, the technicals, resetting those moving averages, resetting those momentums, and how that's played out this year has been very, very, very favorable.
Mm-hmm. Well, and we did talk a little bit about these 50-day moving average bounces, and once you broke out the second 2 times ago, once you broke out, you just saw that nice little fade action last time you broke out, you really got stuck in the mud and played just defense the entire time. I'm not sure we're going to be stuck in the mud for 2 weeks, given the fact that a lot of what is happening is this week, given the Fed and Jackson Hole and whatnot. But the consolidation in front of the Fed after a strong bounce off the 50 should not be surprising to absolutely anybody. The one thing I will say, as this starts to develop, you start to see from an intraday perspective, looking at the 30-minute chart here, you start to see as the consolidation at the top of the top of the technicals starts to consolidate, you're starting to see that high base, and you're starting to see the range of the high base where you could potentially see a new trigger to where you would see that market start to drive up. And right now you got a resistance channel right there at about 44.93, but ultimately you're looking at the significant whole number of 4,500 as that ultimate retrigger. See the market break out again.
Matt, obviously, you've mentioned the Jackson Hole Symposium, which did start today. The keynote speaker is going to be tomorrow with Fed Chair Powell. He talks at 8 o'clock my time in the morning. Could be a market driver. Obviously, everybody's kind of noted in on that. But we got Fed chatter even before Powell speaks tomorrow.
It's almost like Powell called up his friends and said, "Hey, I need you to go out there and talk a little bit about what I'm going to talk about tomorrow, just to make sure everybody is crystal clear," because they might not have listened to the Trading Justice podcast from 2 weeks ago that laid out this timeline that the Fed is now working towards. But it was fascinating so far today. You're talking about Dallas Fed President Kaplan, who said that inflation is a concern. The Fed officials and basically the corporate line from the Fed over the course of the last year has been inflation is not a concern. It is transitory. It will start dissipating in 2022 as we fix the supply side. Well, Dallas Fed President Kaplan today comes out and says, well, that may not be accurate. Inflation might be a concern. The economy has been improving substantially. All of this is language that supports tapering, and quite frankly, that supports aggressive tapering. Kansas City President George comes out today and says the economy has made substantial progress. St. Louis Fed President Bullard comes out today and says we need to get going with tapering, and that he is skeptical that inflation is in fact transitory. And when you look at those two Fed officials, Kaplan and especially Bullard, who has had quite a transition over the last 6 months in comparison to the previous 10 years, but when you look at Bullard come out and talk about how inflation may not be transitory, guys, that's the Fed line for literally a year straight, is transitory. And now on a day where we're obviously the entire world is focusing on the virtual symposium at Jackson Hole, and on the day you have two non-voting members, Kansas City George and St. Louis President Bullard, non-voting members this year come out and give speeches where they support aggressive tapering. You have voting member Dallas Fed, President Kaplan support that. Now, the only open question that we at Tackle Trading had coming into this week was not whether or not they were going to announce tapering. It does look like I don't expect it to be announced this week. I expect it to be announced in September. But you will have the market believing that after the speeches this week, in my opinion. The only open question we really had coming into this week was, what is the pace of the tapering? How aggressive are they going to be with the tapering? Well, according to Bullard, we're starting to see a little bit of that timeline. Now, this is just a Bullard, interview he gave, but he did lay out a specific timeline that the announcement would be made in September. Again, listen to the Trading Justice podcast from 2 weeks ago where we said the same thing. The announcement will be made in September, and he laid out the time frame that it would be done by the first quarter of next year. Now, that gives them about 6 months. 120 billion, 6 months. It looks like tapering is going to be about 20 billion a month. That is an aggressive approach to tapering, which means the Fed is more concerned about inflation than they have been leading on.
Mark, and obviously a lot of what Matt's talking about, it feels like a concerted effort for the Fed to get a message out there, especially to set they're teeing Powell up, like you kind of
They're team
inferred there.
Powell up.
They're teeing him up for success here, obviously. So he's not the only one out there with this same message. Marky, how are you reading into this? Obviously this is kind of what the market's expectations are going to become, and getting that official announcement in September. Now, if we get through the week the way that we're seeing it now and the way that we expect, I agree with Matt 100%. What's your read on this, Mark?
Well, a couple fold. One, the thing I'm most interested in is not necessarily what they say. I mean, obviously, you're going to be paying attention to every detail. I think we have a pretty good idea of what, the range of what that might be, just how much drinking game, catchphrases are used in the next 24 hours. The only real curiosity I have there. I guess I'm focused on, individual areas such as banks and gold to see what the initial response is, to see if it triggers things. You could come out and if the markets, read this, or the algo initial response is this leads to higher yields, whatever, you see these, coming out of Fed meetings or different macro events all the time. Does this trigger things that I have lined up in banks? Does this, impact things that I might be doing in gold? And so to see the individual areas that might move with or without, yields or the dollar, I'm curious to see what the market reaction is following that in those specific areas. The other thing,
I'll give it to you. If the timeline's 20 billion over 6 months, dollar up, gold down.
yeah, and so, keeping an eye on those things, specifically with banks, I have some naked puts on banks. And so, I'm focused on, first and foremost, my portfolio, where I'm positioning money, where I'm managing trades. But as a whole, I had a student ask me yesterday, or was it maybe the day before, well, should I buy, protective puts heading into an event like this? And I'm like, my answer is the same in every situation. It's like, I manage it according to technicals. Technical analysis provides me my trade management decisions. I can always, and I do have a million macro worries. It's my nature, especially the way I invest. And so, but, I'm going to let technicals do the talking on that. When I don't front run.
Can I answer that question?
Yeah.
No, you don't buy protective insurance on a high base of the market at an all-time high.
We're down 2/10.
You let technical
That's the extent
analysis,
of that conversation.
Mm-hmm.
But because I know people can worry about this and that. Let technical analysis do your trade management decisions. And for the next 20, 30, 40 years, however long you're doing this, it will be a pretty good guide.
Yeah, and if you are relying on technicals, which I think is a good tune there, and obviously come and get the context on what's happening from the news, from the coaches here, get a good feel for what's going on, wrap that together to make decisions. We'll see what Powell says tomorrow, and if it moves markets. As of right now, Matt, I'm seeing very similar price action throughout most of the equity market. I mean, the Dow, the S&P, the NASDAQ, the Russell, they're all hesitating after a nice 5-day stretch. I'm not seeing much different in sectors. Is there anything grabbing your attention from any of the indices or the sectors that you think needs to be highlighted because it's set that much different? Is there any relevant weakness there?
Honestly, I'm still on the protection. By buying a protected put option against the market, you're hedging your risk against inflation. I'm not sure you want to do that, but anyways, we can talk about that later. Ask your question again.
Well, just simply put, in terms of relying on price action, I'm looking across all sectors. I'm looking across all 4 indices. I'm seeing a light range candle across almost everything, kind of just a hesitation day. Is there anything within the sectors or the indices that's grabbed your attention?
No, this is absolutely a hesitation in front of the Fed. And again, technically speaking, there's a lot of headlines out there today because you're doing this 2 things. Number one, you've obviously had some international incidents with the 2 bombs that went off in Kabul.
Mm-hmm.
Number 2, you had the starting of the Fed, and so you obviously have a lot of headlines in the market today that could spook some degree of price action, but we haven't seen it yet, right? We haven't seen it yet. When you're looking at the last 24 hours of data, I have to scale in to the 24 hours to actually see the price action.
Mm-hmm.
There's just not a lot of volatility, quite frankly, over the last couple of days. Now, you did have a little bit right here at the cash open here today. That was a little concerning. It got gobbled up an hour later. So I truly do believe you are, most market participants right now because we're so tight against Powell's speech tomorrow.
Mhm.
If you haven't pulled the trigger yet on either side of the equation, why don't you just wait till Powell tomorrow? I think that there's a lot of that happening. And once we do get Powell's speech, which we've seen the beginnings of Powell's speech, right? We've seen it with Bullard, we've seen it with Kaplan, we've seen it with other Fed officials, we've seen it with George today. We kind of have an indication of exactly what Powell's going to do. But it's kind of like the breakout. Let's not front run. Let's see confirmation on this one, because it's a major shift in Fed policy that could have an impact on multiple different markets. So I kind of feel like the last 3 days is simple hesitation after a strong move last week in front of a major event, and you got to see it confirm. But from the actual technical perspective side of it, yeah, you could see volatility to the downside, but the only trade I see that could be triggered is the 4,500 breakout.
Yeah, and it would have to obviously get back up above those levels and confirm. And like you say, let's wait for tomorrow. I was going to call it a popcorn moment tomorrow, but it's 8 o'clock in the morning. I don't know if I'm doing popcorn at 8 o'clock in
Guys,
the
it
morning.
might do it by the end of the day.
Yeah.
There's more volatility in headlines right now than there is the actual marketplace.
I agree. All right, then let's move on. Now let's move into the commodity market next here. Crude oil, gold, the dollar, Bitcoins. Take a peek at what's going on here. Obviously, a nice response off of a lower retracement last week, the sell-off last week, Matt. We found a pivot point, fired off. Now a couple dojis in a row. What you read on the crude chart here?
Yeah, I mean, Tyler talked about it yesterday, how the bearish case kind of got blown out of the water with the strength of the candles breaking back up above the pivot point at 65, as well as the 9 EMA. That just blasted that technical pattern that dominated the market from 2 weeks ago, that saw the violation of 65. And so the bear case got just absolutely destroyed this week. And for most market participants, that's a good thing, whether you're talking about energy stocks or crude oil or miners or whatever it is. That's a positive development. Is there a trade here? I don't believe so, not as of yet. I would like to see some degree of secondary technical pattern. I do believe the bear case got blasted this week. I don't think people are looking to short when you're above 65 in that 65 to 68 range. If you get back under 65, even at that point, I'd be like, wait for the double bottom, and that's a buy opportunity. So I'm looking at a secondary pattern to develop here on crude once the volatility has shifted here back to the buy side. I'm just waiting on the secondary pattern here. It could be a high base, could be a double bottom. We don't know yet, but I do think it's a positive development with the strength of the candles getting back above 65, blasting through that 9 EMA that played a role as resistance last time. I think all of those are positive developments for crude.
Greg, I always ask you your take on crude because I know how important dividend-paying energy companies are to you. What's your read on crude right now? I've been writing cover calls on mine, Greg. The energy stocks I own and whatnot. What is your read on crude and energy right now?
Yeah, so I pay very close attention to this because I do have a portion of my portfolio in it. I was really happy to see the candle close above the 20 MA there. I think you guys got the 20 red there, so I was happy to see that. The only caveat, I guess, would be the candles on the crude light chart. They were getting smaller as they were going up, so not a big surprise that it's not doing much today. But I was happy with the response that came back, and I feel like it's an opportunity, really. I 100% agree with Matt, though. It's still got some work to do. Right where we're sitting right now, I would say that we have a resistance level right around, say, the 49-ish there. Once it gets above that, I'm much happier. Now I realize we've got a falling 50 right above it. That really doesn't bother me too much. If we can get above where we are now, I'm happy with that support. And that's when I'll go and start to look at, some of the bigger players in the oil space. Mark and I talked about ExxonMobil last night on Trade Masters. So that's something I'm into, and not only investing but trading as well. So I'm always watching the oil charts here because it's very much tied to that. So
Well, and especially the last week, Greg. I mean, energy stocks are loosely tied to oil, but it's more of a fundamental analysis over time. Energy stocks don't always trade with the value of oil on a daily basis, but when you look at the pattern over the course of the last 5 days, really strong response in energy coming off the lows here at 45. 45 is a horizontal support level. So you see that 45 kind of play out. Strong response, get 2-day response, breaks back above the 9 EMA, gets into that 20 SMA, breaks back above the previous pivot points that were acting as a support level. There's not a lot of difference in the analysis on crude oil right now. So as crude oil does develop this high base, or perhaps the double bottom, I think would be very interesting from a, hey, listen, let's pick up some good quality energy stocks type thing. The high base would be more interesting from a trading perspective, in my opinion. But either one that develops, crude and energy stocks are trading very closely with one another right now.
Yeah, strong correlation right there. Appreciate the analysis, guys. Let's move into gold next here, Matt. It's just hanging around this 1800 mark. I know we dipped a little bit below it yesterday. It is hanging around. Just congestion, Matt, is what I see. I see a bunch of moving average soup, I think Mark and Frank call it. I see just a compression pattern. Needs to show me something else. What are we needing to see here? I know the ultimate breakout's up there at 1840 or so. Is that what you're still watching for here on gold?
Honestly, what I'm watching for on gold is tapering, macro conversations, inflationary conversations. These are the things that I'm paying attention to on gold. And while those conversations happen, the hope is that the technicals start to shape up a little bit, because right now it's a little bit of a it's a very difficult instrument to analyze, quite frankly, from a daily and even a weekly perspective. You start reclaiming, you reclaim the 200-day moving average at this point. That's between that 1800 and 1840 zone that I've been talking about in recent history. You reclaim that 200-day moving average, you start to see a little bit of bullish momentum. You reclaim 1840, you're going to start to see even more bullish momentum. But once again, if the Fed is going to stick to a timeline that Bullard did suggest, this is not confirmed. It was one speech from a Fed member who's not even voting on the subject this time, but he's been a member of the Fed for a very long time and has been utilized many times in the past to go start putting out messages from the Fed. So whether you believe his timeline or not, a 6-month, $20 billion tapering is an aggressive, hawkish type response, and that is a response that is only done, in my opinion, if inflation is a concern. So if you're going to taper that aggressively, you're going to target cutting the supply from the dollar. That drives the dollar up, and that drives gold down. That's the concern. So while we work that out from a fundamental perspective, and as we start to see the timelines to develop from it, from a tapering perspective, and once the announcements are actually announced and confirmed, we can start to see the reaction in the bond market. We can start to see the reaction in the currency market. We can start to see the secondary reactions in the stock and the commodities and the commodity markets. At that point, I think you can start projecting from a fundamental and a technical perspective. And again, the hope is gold's chart in that time frame, gold's chart solidifies itself a little bit, because right now it's a choppy mess.
It is a choppy mess. And go ahead, Greg.
I just got a question for Matt. So if they start tapering and restricting the dollar, that gives the dollar more push. But if inflation is actually a concern, gold's still, as far as I understand it anyway, still a hedge against inflation. So doesn't that cause a bit of a tug of war fundamentally, Matt, from your opinion?
It does for most people. For me, it doesn't. I personally do not see digital gold ownership as an inflationary hedge. I think you have more of the problem. I see physical gold as an inflationary hedge. That's the ultimate hedge against currency risk, is gold. And when you look at historically, it is not digital assets that protect against physical inflation. It is physical asset classes that do. And so when you have more of digital, you have more of the hypothetical problem, which is inflation. So I just don't see, because honestly, the spot price of gold goes far more economic analysis and safety protection than it does inflationary data. In fact, when you see inflationary data, gold doesn't go up. It actually consolidates and goes down. It's when negative economic activity happens and the fear starts grappling the market that the spot price of gold goes up. But no, I personally see physical gold as an ultimate inflationary hedge. I just think if you're protecting in the digital areas of the world, such as stocks, I feel stocks are a better inflationary hedge, quite frankly, from a digital perspective than digital gold is.
Fair enough.
Yeah, it's going to be interesting to watch whatever price response happens in gold, the dollar, and many of these products tomorrow after PAL. But in terms of in front of PAL, Matt, are you then saying we're just kind of at a point where we just got to wait and see what the price response is? Is that where your head's at?
Does anybody here want to get in front of the Fed?
No, I do not. I do
You
not.
want to get in front of that freight train?
I got a more direct
No.
question if you want it.
Yeah.
Is this the
Yeah,
first
please.
time you're going to be watching for the dollar's price reaction? Because it's been boring lately. I mean,
I watch the dollar all the time. I
Mhm.
just don't report on the dollar all the time. But yes, I
Mhm.
will.
I
will
miss my
update.
snack time.
It's
Yeah, no, I'm not doing it tomorrow. I'll do it on Monday.
there you go.
And
All
I
right.
will specifically be asking Mark certain questions to make sure that he has to stay for my dollar analysis on Monday.
Dude, what do they call those? Easter
Dude,
eggs.
you don't
Drop an
get your
Easter
nap
egg
time
in
at
there.
kindergarten, bro.
Make him see it later.
Yeah.
All right. Last one here, Bitcoin. I want to get Greg's take on Bitcoin here in a second as well. But Matt, I'll get a technical read. Greg wrote about Bitcoin in his rookie blog, which Greg is old money homes, a little bit, you would think maybe out of character, actually, talking about a new crypto asset. But Greg, you kind of turned the corner in terms of interest and sentiment towards Bitcoin in the last couple of months. Matt, what did you read technically? And then I want to get Greg's thoughts on the crypto markets based on what he wrote in the blog.
Technically, I'm honestly a little bit concerned today, more than I was yesterday. Yesterday, a little bit of a snapback, reclaimed a lot of what the drop was the previous 2 days. You came right back down into a known support level. Not a lot of concern in this type of flag-based pattern. Today, you reclaimed that, tested above the intraday breakout, could not get any momentum, got blasted right back down and came back down underneath the 47.5 handle. I do think technically this is a little challenging environment, and certainly I do not believe anybody's looking to pick up dips here because it's more about managing that breakout right there, that breakout right there. So it's more about managing at this point, but today is a little bit of cold water on that projection back up to 60K.
You know, Greg, I read your blog this morning, and you obviously are now much more interested in Bitcoin than you've been in the past. What is it about it right now, Greg? Because we saw it take off, break out at 10K. We were reporting on this in the halftime report day by day last year, Matt. High based at 20K broke out. We had so many different technical patterns as this trend was developing. You watched that whole thing, didn't get involved. And then you watched it come back 50, 60%, have a low base pattern, show reversal characteristics. Now you're getting interested. What is it about that timeline and that storyline that got you interested in Bitcoin?
As I wrote in the blog, there's a lot of different things that led up to this, right? But I started to talk to some people that are really into it. Started to learn. I'll be honest, I don't know a ton about it, but I started to do a little bit of research. Kind of, talk to some people that I trust, and yourself included, but some of my mentors as well. Who are involved in this kind of stuff, and just started to get a feel for the whole system. What it's all about. It started trying to figure out, okay, what if any can I see, from a future perspective, right? And so kind of looked at all of that stuff, and after looking at all that stuff, I still reverted to the old money homes way to do it. But what really got me interested actually was the reversal pattern. If you kind of look at how that fell, that 50-60% fall, I have kind of some metrics I look at fundamentally, right? And so looking at how this thing fell and then started to make a reversal. Yep. So it broke that falling trend line, then it broke some moving averages, then it broke some resistance. That's when I looked at it, and all that stuff that was already in my head fundamentally, I looked at it technically and I went, now's the time. And that's really how I got involved. And literally I've been involved only for the better part of 3-4 weeks now. Right. And it's all because it's because it showed me something technically that I could really I don't want to say rely on, because it's not the right word. It's something that I could get involved with because of the technical patterns to it. Looking at all the fundamental stuff behind it, I will still say that I'm an infant when it comes to knowing anything about cryptocurrency, but I've at least started to take an interest in it because, after talking to some trusted sources, this thing's going to be around for a while. I might as well participate. Now, for me, speculation is kind of a dirty word. I don't do a lot of speculating, but I have a certain portion of my portfolio where I will speculate on stuff. And this is where that category still falls in for me. I just felt that it was a good time for a little speculation. And then that's how I'm approaching it. So
Word speculation makes you feel like you need a shower. Is that what I just heard?
pretty much, yeah.
You just don't like it. It gives you the willies.
I've just seen the damage from speculation before. I've felt it. I've done it. I've watched other people do it, and it just, like I said, it makes me feel a little bit dirty. So, me, there's a reason the old money moniker's on here, right?
Sure.
And so it's just, it's a joke in some respects, but it's also kind of, in the back of my mind, that's what I think about. So.
Gotcha. Matt, any last thoughts on Bitcoin real quick?
The word speculation does drive emotion in people. But when you buy anything, you're speculating
on the price.
You're speculating on every single aspect of your life. You're speculating. And so I don't think we should fear the word speculating. Anytime you try to do anything besides a cash flow strategy or a volatility strategy, you're speculating. Simply by being in the market, you're speculating. And so we need to speculate because we speculate on inflation too. So I totally get Greg's point 100% because the word speculation is to some market participants as synonymous as gambling, right? Well, let them gamble.
Face your fears.
Yeah. Well, I just
for Greg. Yeah.
The word speculation is a big pet peeve of mine because it just means direction, and we do that every single moment of every single day in the market.
Yeah.
So it's all about perspective, right? So yeah. I'll speculate on Coca-Cola because I can hold a bottle of that in my hand. But now I'm speculating on a digital currency, which I know very little bit about. So that's where my range of speculation goes from.
But you also
blue chip stocks to
I get it.
Right?
But you also speculate on the Canadian dollar as well because you own that. So
I know how to really.
I can come back all day long with this, Greg. I can play ping pong with you all day long on this speculation. But regarding the commentary on Bitcoin, it's showing a little weakness at the top. Okay, and that does throw off the daily projection, in my opinion. And like I said, it throws a little bit of cold water on that 60K projection. I just wanted to reiterate, I was talking about it in one leg up based on the daily price action. The weekly chart is very strong, has shown no hesitation, and is simply consolidating after a massive $20,000 drive up in price in the last 6 weeks. Yeah. And so little overextended. It's not shocking when you take it out to a longer time frame to see a little bit of hesitation at 50K. So the daily price action might have a little weakness in it. The weekly is just showing a little hesitation after a little bit of a massive run up in price.
Yeah, and I have no problem with that at all as a holder, Matt. I actually like the congestion a little bit. Let some of that buyers and sellers fight it out around 50. Don't go straight to the moon.
Honestly, if it wants to hang out in high base and like hanging around, you want to hang around all you want between 45 and 50K. That'll line up that 50K breakout really well if it does that. So there is some secondary patterns that could develop here. But
if I ever want to irk Matt, I'm going to speculate about the weather.
If you want to show your ignorance, that's fine. You two speculate poetically every morning about the weather. That's fine. I listen.
So we report on the weather.
Yeah, you guys report on the weather. It's like, hey, is it sunny up?
It is.
Quite a lightning storm.
When's that rain coming now? Are we going to get that rain today?
Oh, this is so funny.
I have to hear this every morning.
This is Inside Baseball. All right, let's move on. Let's move into stock talk actually next here, Matt. And let's break down some of these companies that reported earnings. No more on the big picture of the market. It's got to be all about me right now. I want to talk Salesforce.com. You know, it's one of my favorites.
Of course you do.
I talk about it all the time. They had a great report here. Let's start with CRM. Matt, what did you like? What did you not like? What'd you learn?
I liked a lot. Let's just put it like that. I not a lot to dislike here, and it's about time, Salesforce. Good to see you waking up in time to catch some of this price movement. But CRM comes out today and reports a very healthy EPS number at 148. The expectation was 91 cents, so you're talking about a very decent beat on EPS numbers. Revenue came in line, 6.3 billion versus the expectation of 6.2. That resulted in about a 23.1% yearly increase in revenue. And then when you look at guidance, slight increases in both revenue and EPS guidance. This report, it's a very, very good report, and shockingly not the best report today, but it is a very good report, and investors of CRM have to be very happy today.
Yeah, absolutely. If you're an investor in CRM like I am, and it's long term for me, and you know that about this company, I've been all over them for a very, very long time. You love what you saw. They completed the acquisition of Slack this quarter. That had been in the works for about 8-9 months. So they finally finished the biggest merger they've ever had. They reported billion-dollar revenue in
a merger, by the way, that we loved at the time of the merger, and still think CRM can figure out how to create revenue off that. But
1,000%. Absolutely. They still don't have it all worked out.
I still like the merger. I still like the merger. So it was one of those ones where we like the tech. We don't know exactly how it's going to work with CRM, but we want to control it, right? Yep. It was one of those scenarios.
And the business they picked up, sorry, Greg, let me get a couple of thoughts out if I can. They picked up business in subscriptions with government agencies. They had growth in that segment. That's usually a consistent revenue driver. They did over $1 billion in sales on the following platforms: Tableau, MuleSoft, and Slack. So they're literally generating revenue from all of these different areas of subscription. It's not just Slack and Salesforce. They've got Tableau, which is a data analytics software. They've got MuleSoft. They've got all these different categories in their business. And out of all of the revenue, that's 6.3 billion, Matt, 5.9 was subscription revenue, because they're generating this consistent business model behind it.
Recurring revenue stream, very powerful.
I love it.
Yeah, you should. You've been an investor, and you've you have some crowing, and you have earned
I love
that
when I hear
crowing.
Like Tim excited. I love it. Like,
well.
I saw what I wanted.
Let's see how excited he gets as CRM starts to navigate an all-time high breakout. You are looking at an overextended scenario. We always talk secondary technical patterns following some type of gap up or gap down when you're looking. And CRM could develop some very interesting things. Number one, the gap up, and then the low of today coincides with your old breakout channel over here. Let's give that a number. That number's right in the 270 level. You have an all-time high resistance level between 280 and 284. That will be interesting. If CRM is not on the radar, and you're looking for a company like CRM, nice little tech company, with software application. And so if you're looking for that type, CRM's good companies. Had some valuation concerns, but with the positive beat today, those are dissipating a little bit. But overextended in the short term, typically what we look for, a little bit of drop in price to close that gap, retest the breakout channel. Doesn't look like it's going to want to do that, Tim. It gapped up and then ran just a little profit taking today. Look for some consolidation. Give me some, you call it inside baseball? We do a lot of inside baseball at Tackle Trading. We have a lot of conversations. But give me some inside candle action between 270 and 275. Show us a little defense at that 270 mark. I think that secondary pattern could develop here over the next week or so.
Yeah, you got to get a secondary pattern before there's a trade opportunity. It's one of those reports, kind of not as good as Dick's, not anywhere near as good as Dick's. I'm not going to use that as a comparison, just as
a way to bad comparison.
Talk about yesterday. When you get a gap up, you got to wait. You just got to wait. That's the point. You got to wait for that secondary pattern.
Well, and again, where it gaps up to and whatnot is important, right? There are, like when you take DKS, for example, obviously you're seeing the candle there on the weekly chart, right? Gap up, and Dix is playing that role, right? It's playing that role. Give you some consolidation there. Let's see how it works out. Very similar analysis. The difference, though, on CRM, specifically, the difference is it gapped into resistance. You gotta, and that's an all-time high resistance level. You gotta let that play out, because even if you momentum chase CRM, you can't momentum chase CRM the same way you can Dix. With Dix, it breaks out of the high of today. You could see momentum behind that because there's nothing in front of it to stop it from a resistance perspective. CRM gaps into resistance. You trade above the high of the day, and all you're doing is staring at 280.
More mess.
Right?
Yeah.
You're just
Yeah.
staring at massive resistance areas. So again, think step system on breakouts, right? Left of the chart. You always look left of the chart. Left of the chart. If there's something that can stop it, you got to hesitate. There's something on CRM that can stop it. So just let it consolidate it. Let it work itself out.
Very good. All right, what do we got next?
Let's go to the best of today. Let's go. Yep, let's go the best of today. Not the best price response, that's CRM, but the best actual raw numbers, that is in Ulta Beauty Incorporated. Ulta comes out 456 versus the expectation of 249. Massive beat on EPS numbers. Revenue came in hot at 2 billion versus the 1.7 expectation. That resulted in a 60.2% revenue increase year over year. They weren't done. They also increased EPS and revenue guidance for the quarter and the year. Salesforce gets the hat trick. They do. But they barely beat the revenue number, but they do get the hat trick treatment. Ulta gets a hat trick treatment as well. Legitimate earnings report, great numbers posted, EPS guidance and revenue guidance increased 10 to 15%. Really healthy numbers. Gap up, sell off. You saw this in retail here today. You saw some pain. We're going to get into DG, Dollar Tree, and Burlington here in a second. But strong numbers posted the gap. Market response brought it down. If you're looking for something to keep an eye on here, and I do like the fundamental response here, keep an eye on two different numbers. Number one, you got the previous pivot at 275. You could see this drive back down into price. See this between 275 and 280. That's where I'm looking at from a technical perspective right here. 275, 280. Let's see if we can get some type of doji response, upward moving in price. That's what the technicians are going to keep an eye on there. 275 to 280, a little slow momentum there.
Gotcha. What a very fascinating candle, man. That
Yeah.
Juggernaut of a company.
Yeah, absolutely.
And right. By the way, all-time high breakout from 2 weeks ago as well. Moving on, let's go.
Sorry, Matt, just for clarification, you meant 375, 380, right?
Yes, thank you.
I heard you say
375.
Yes. Just want to make sure everybody's clear on that so they don't get a deeper retracement. So
375 is the pivot here. 380 is my subjective Fibonacci analysis, right? So I didn't need to draw it. Tim, do you need me to draw it?
Nope.
Okay, 375 to 380. All right, so let's move on to Snowflake here. Let's get the S in Snowflake. Snowflake here, interesting technical formation as you do break out on a positive earnings response here. I say positive earnings response because it's not that positive from a raw numbers perspective. Snowflake came in at a negative 28 after all the gapping nonsense that was a negative 64 handle. They also were expected to come in at a negative 15. So if you take the gap or the non-gap, they missed in both accords. Revenue did come in slightly above the expectation, 272 million versus the 256 expectation. The mixed data though, and kind of where the bulls are kind of winning today is on guidance. They increased their long-term guidance while simultaneously lowering their short-term guidance. This one is a mixed bag in Snowflake today. If you wanted to find some positive, you focused on the long-term guidance. If you and perhaps some valuation. If you wanted to focus on the negative, you're looking at the miss on EPS numbers and the mixed guidance report for the quarterly. So it's a mixed bag. You are seeing officially a breakout. You're coming into a very important psychological number of 300 here on Snow. Now, when you look at this 300 number, it is a significant whole number. It has played a role both as a resistance perspective. Look at the breakout of that resistance over here. Forms a higher high. Snapback, volatile on a earnings report, got gobbled up right there at $300 before you drove up to 420, and so 300 really hasn't played a role since that point, but it did play a role in a very significant one in my opinion from a technical perspective. 300 being that significant whole number. Look for some consolidation here. Snowflake coming off the lows has not achieved the all-time high. 300, you're looking for a secondary technical pattern. I think it's got to be a strong technical pattern, though, because these numbers and these raw numbers, number one, we're talking about a company that's underperforming its industry, underperforming its sector, underperforming the actual market itself. We're also talking about a company who fundamentally is not as healthy as the broad market either. And so mixed data, mixed report, underperformance, you got to have strong technicals to support any type of trade. You have the opportunity at 300. It just needs to develop, in my opinion.
I don't see a lot of great swing patterns confirming and actually playing out well in the past either. Does that, first of all, do you see the same thing? A lot of overlapping candles, a lot of inside candles back and forth. Is that the nature of
The
just
ones I
reversal?
pointed out were the ones I pointed out were swing triggers. 300 here,
That one
broke up, snap back there. Those are all swing mechanics right here. Since the pandemic, since this year, no, it's not been a swing trader. But again, you're talking about an area of the market that's completely underperforming everything else. So no, not a lot of eyes in place. Snowflake's not a great swing trading stock, but again, mixed fundamentals as well.
Gotcha.
The only thing I would like to see is a high base that is kissing up above 300.
Then we can start talking. Got it.
Yeah.
All right. Sounds good. Where else are we going here, Matty?
We're going to Momo and the latest attempt. Hold on. The latest attempt in a number of series of attempts for Momo over the course of the last, now 2 years now, Momo. Get it going.
Come on, Momo.
What are we doing? Your entire symbol means you need to get on the track here. Let's go.
Yeah.
Momo had the latest attempt at a potential reversal pattern here. Nice little W formation coming off the lows. We'll take a look at that here in just 1 second. From a raw numbers perspective, 39 cents against 32, so a beat on EPS numbers. Revenue came in at 568 versus 561. Beat on revenue. We're talking about minor beats. No mixed data here, just minor beats. You got through earnings and you're at a low price. You're looking at that W formation. Look at the nice little strong downward movement in price. We're seeing these formations in those Chinese components, right? You're seeing it in FXI. You're seeing it in a lot of the Chinese stocks out there, not named Alibaba. But outside of that, you are seeing a nice structured W formation with a potential trigger above $12. Keep an eye on that. Momo is a cash flow type of stock, not a great directional type trade, but if you're looking for some cash flow where you can sell some aggressive cash flow type scenarios, bring in that nice premiums. Momo's W formation does get me interested a little bit. Mark, you're the king of dog here. What do you think of the W formation here on Momo post earnings?
I think it's a Chinese stock, and so it violates one of my primary rules lately, and I don't get involved.
Okay, totally respect that. That's kind of where my head is at too right now. But is there any scenario where that changes?
I've cash flowed Momo numerous times in recent years. So sometimes these type of stocks can be cash flow darlings, where you're generating way above market returns consistently, back and forth. So if we ever get some geopolitical certainty on what China's actually doing, and we could have like a 45-minute or 45-hour conversation speculating on that one, right? Then of course Momo immediately comes back to the list. Things I like about Momo and why I've cash flowed it historically is, it's pretty consistent. It's just a pretty consistent grindy type company, not just on the chart, but in their revenue. Now, there's been growth concerns, but there hasn't been stability concerns. And so all it ever takes for a company like that is to have a spark of growth and you go back up. So, this will go back on my trading list the second I feel more comfortable about China.
I think, honestly, I think that means you're going to miss whatever move happens in China.
Because, no, absolutely.
Yeah, I think that's what it means. I would like to see some degree of, I don't think you're ever going to see certainty, which means anybody that's waiting on certainty out of China will never mess with Chinese stocks at all. Because have we had certainty out of China in the last 40 years? No. It's just not going to happen. Like, that's never going to happen. Could you see less risk though as China has made some overtures to American regulators in the last couple of days to bring this volatility down a little bit. As that story plays itself out, I could see some opportunity here, and I maintain what I've said many times. You never bet on China long term over the US from an economic or a fundamental perspective. However, there are pockets of time where there is opportunity, and right now you're seeing W formations in a lot of Chinese components.
Yeah, and Matt, I've owned Momo throughout the entirety of the year. When you put it on the DSM list early in the year, I bought some shares, and I've been trying to write cover calls to offset cost basis through the years. It's been coming down. I now don't have a cover call on it. I don't hold cover call into earnings, number one.
No.
And this is more longer term cash flow kind of thing for me. And I'm leaving it uncovered until I see how it reacts to this resistance personally. Now, I know that exactly the risk around Chinese stocks. It's why Momo's been drugged down this year. I still like this company, especially for the price.
And technically, I'm still with Mark on the China is a stay away for me right now. But just this week, we are starting to see a little bit of momentum turn from a technical perspective. And we're seeing some overtures. And remember, guys, over the last 3 months, everything from a regulatory perspective was all negative conversations. This week, China's making overtures to the U.S. regulators on bringing back Chinese components and abiding by U.S. GAAP principles from an accounting perspective. I think that's noticeable.
It's a significant story without a doubt, right? It says wants to play ball. I mean, because that's one. I mean, whenever people, am I getting the right numbers? And am I getting true numbers to base my fundamental conclusions on? Adhering to U.S. standards on accounting, it would give a lot of visibility and it would alleviate that fear permanently.
And guys, let's not act like that's a small story. That's a story that's been going on for 10 years.
That storyline has impacted sentiment on Chinese stocks
many times.
Every day I have been a market participant in the last 15 years.
So maybe they're still doing some aggressive curtailing of their own regulations, but I do think you do at least have to notice the overtures they've been making to other regulators around the world, especially out of the U.S. Does this have some legs? I don't know. We got to analyze it in the real time. But what you're seeing, and again, if you want to go out to FX side, I wasn't expecting to have a detailed Chinese conversation. But what you are seeing a little bit from a charting perspective is as China is maybe cutting back some of that aggressive regulatory conversations, you're seeing slowing momentum in their charts. And so it's just something to keep an eye on.
Gotcha. All right. Sounds good. Anyone else on earnings roundup?
No, I just want to rapid fire something that was very noticeable today, and that was in the discount retail space. Dollar General gap down volatility, DLTR gap down and sell down. Burlington here as well, gap down and kind of maintained. The commonality in all three of these reports were gap down pre-markets. Now, they've had different responses post-market open, but all three components, similar industry, discount retail, they all got blasted here on an earnings perspective, and that was on earnings that came in at $269 versus $259 on Dollar General. Dollar Tree came in at $123 versus $103, and Burlington came in at $194 versus $152. All three beat on EPS numbers. Revenues were kind of everywhere, but all three beat on EPS numbers. What's the problem then? Guidance.
Yeah, it's got to be forward guidance.
All three lowered guidance. This is concerning for specifically this. Big box retailers like Dick's from yesterday, Ulta from today, like Genoport, the great Genoport, Coach Gino said on Monday, it's been a blue chip. It's blue chip last week. It's blue chip this week. Earnings responses in retail have been beneficial to blue chips this week, and it got blasted on the discount side of it. And so you are seeing a little bit of separation there in consumer discretionary. Just wanted to point that out.
That's interesting to know. Appreciate that. All the Dollar General types, the discount retailers all
I
coming down.
the discount retailers, like this is concerning. When you beat on EPS numbers, all of them simultaneously lower guidance and all get blasted.
Mark, I don't.
That's volatility you don't want to touch.
And I don't need a long conversation to speculate on this, Mark. I wonder if increasing cost on the input side is it hurting these companies more, maybe because
I
they
mean,
don't
it's
have that
supply
much of a
chain.
margin.
Yeah, but
there are supply chain issues
Go
going
ahead,
on,
Matt.
and they cited that, like Dollar General specifically cited that in their earnings call.
Dollar General get better at this type of marketing messages because that's very easy to understand. You're right, Mark, but also consumer demand should help those companies in the face of higher cost. And so whatever that CEO said is not accurate, given the fact that they should see an increase in demand.
That's fair.
There's COVID concern here, in my opinion.
Gotcha. All
Lockdown
right.
COVID concern.
Lockdown, COVID, and we're seeing the different price reaction out of the big bonks, mega cap versus these other ones. That's interesting. All right. Very good.
That's all I
Thank you.
had. That is all I had from an earnings roundup today.
Only one news story. Just want to just give it. I don't have much analysis on it. Western Digital is WDC, popular trading company in the technology space. It is under potential merger talks with a Japanese firm called Kioxia for $20 billion. Whenever you have speculation around a merger, you kind of have to just make a note of it. If you have WDC on your watch list, just be aware of a potential merger that may be coming down the road. Wall Street Journal just did report that on yesterday. All right, let's move into.
I didn't catch that. So did they? Because WDC is trade. I've traded this stock for years and years and years. Was it an offer or was it just speculation?
Speculation right now is the talks have been heated up. The Wall Street Journal said that by mid-September, they expect some kind of announcement one way or the other.
See,
that's all I know.
No, that's speculation.
About mid-September?
It's just dirty. It's all dirty.
All right.
Oh, funny.
And then call back. I like it. All right, let's move into our last segment here. And Greg, let's have some fun with this one here today. Each and every week, we play a game called Buy One, Hold One, and Dump One on Thursday's show with Coach Greg. He's more of a longer-term thinker. We give him the nickname Old Money Homes for a reason. Big into fundamentals, big into dividend payers. He always looks deep into those numbers and metrics before he makes a decision. He finds three different companies, lays the argument out for us. Then we all got to make a decision. Which one would we buy? Which one would we dump? And which one would we hold? Greg, what you got for us today?
And Greg, I got to tell you, I am fascinated by this conversation today because this is an area of the market I've been looking at lately myself. And I haven't pulled any triggers. So I'm fascinated with what analysis is.
I know the three stocks coming down the pike too, and I'm excited for Greg's analysis as well. These are popular names, right? Entertainment names. They're just popular names.
People know these companies, and
take it away, Greg.
There were some surprises in there. Even when I was doing the research, there were some surprises in there for me too. So I think this is going to be entertaining. This all came about. I looked at XLC this morning. It doesn't look as good right at this moment as it did this morning, but it's on that resistance, ready to break out kind of area there. Showing a lot of strength, much like the S&P 500. It seems to love the bounce off the 50. We just got that recently, so lots of strength in this particular area, and that's why I decided to go to the comms to see what I could find. So went in, tried to find three that are closely related. So the three stocks that we got were Viacom, Fox A, and Comcast. So all virtually in the same business, across the board. Let's start with Comcast since Matt's already got it out there. But Comcast, really nice chart here. Pushing up against that 60 resistance there. Been moving really, really nicely for the last, I think you got a 6-month chart on there. But yeah, looking for a breakout there, much like XLC, in that similar space there. From a raw numbers perspective on this one, Comcast about a $60 stock. Dividend yields 1.68%. It's got 12 years of consecutive dividend increases. Started paying dividends in 2008, which is interesting. The last time we had a crash, they started paying dividends, which is good. Payout ratio is only 36%, so very low. PE ratio is 22. Not high in comparison to the overall market. Assets versus liability. This is one where Comcast really stood out. They got 274 billion in assets versus 182 billion in liability. So those numbers are considerably higher than the other two that we're going to look at. That's a lot of weight behind you. Free cash flow, they're sitting on almost 14 billion, so 13.8 billion. They're sitting on free cash flow. 2 years of consecutive net income increases. This week I did a little bit of something different. So obviously the weekly options, I've been doing that for the last few weeks there. They have weekly options. Their ROI approximately 30 days is about 1.6% at the money. So if you're selling a covered call there, you're looking at about 1.6 there, right at the money. Now, one thing I looked at was institutional ownership. So another thing that I look at, on occasion is, how much do the institutions, these are your hedge funds, your mutual funds, these are the big players, how much of that do they own? Because this is what can drive, when they start to acquire or get rid of stock, this can drive prices. And so it's something I think is important from a fundamental metric to look at. So in the case of Comcast, over 85% of it is owned by institutions, and the current change is only negative 0.25. So really no selling to speak of there on Comcast. Growth wise, you're looking at about 11.3% this year and a healthy 6.5% next year. So overall, you're looking at Comcast, pretty solid company with a pretty solid technical chart as well. So that one was quite decent as far as I was concerned to look at. So when we start comparing the other ones, I'll wait till Matt. So if we go to, it doesn't matter, Viacom or Fox A, take your pick there, Matt.
Let's go Viacom.
Okay. So with Viacom here, $40 price, $41 stock. Dividend yield was the best of the bunch at 2.34%. So healthy dividend. They've got 1 year of consecutive dividend increases, so not as good as Comcast. Started paying dividends in 2003. Their payout ratio is only 24%, so lots of room there for dividends. PE ratio that I could find, a forward PE was 8. So very, very low on this particular stock. Assets versus liabilities, right in tune, 53 billion versus 37 billion. So, right in tune there. Free cash flow, about 2.6 billion. So these companies tend to keep a bit of cash on hand, which is nice to see. Again, 2 years of consecutive increases. They have weekly options. Now, this is the one that I thought was interesting from a cover call perspective. At the money on a Viacom cover call, you got 3.6% around 30 days. Now, looking at the chart, obviously it's a very different chart than what we're used to, right? I guess I kind of skipped by things there, but so if you look at the chart there for me, Matt. So obviously this isn't riding high, much like Comcast was, more trending sideways. So a little bit of chop here, but again, that covered call at the money, I averaged it out to 30 days. It was 3.6%. So a very healthy covered call percentage there. Institutional wise, 70% owned by institutions. Now, this would be the key metric for me. In the last, I think it doesn't actually give the time frame, but they've had negative 17% institutional ownership. So been some institutions dumping that recently.
I can think of one.
Who would that be, Mark?
One that went under.
The Bill Wang, yeah. What was it? Yeah, we talked about that on
the hedge fund that died.
Yep.
There you go. Yeah, so a bit of a drop there. But you'll notice that something that I found interesting was, you've got a decrease of 17% of institutional ownership, but it really didn't change the price all that much, right? So I thought that was very interesting about that one. So growth wise, they're 11.2% this year, 3.4% next year. So kind of in line with what Comcast was looking at. Just overall, again, pretty solid fundamentally. Technically speaking, the picture is very different.
What was the liabilities versus assets on?
It was 52.7 versus 36.6. So say 53 versus 37 billion. Those are in billions. All right.
Okay.
And finally, our friends at Fox A, 20th Century Fox there. So again, different chart than the first one we saw, not pushing to the all-time highs there, but not a bad chart. Maybe some reversal characteristics coming into play there. Again, it's not a mover and a shaker like Comcast, but again, very steady kind of sideways action there. Numbers wise, we're looking at $37 stock, 1.3% dividend yield, 0 years of consecutive dividend increases. Now their dividends started in 1970, so quite a long history for them. Their payout ratio is only 13%, lowest of the bunch. PE ratio is 10. So we got kind of a mixed bag when it comes to PE ratios here. Overall, their assets versus liabilities, 23 billion versus 12 billion. So very much in line with Viacom. Free cash flow, 2.15 billion. 2 years of net income increases. They have weekly options, and their at the money covered call was 2.7%. So overall, pretty decent there. Now, the one metric I found very interesting is this company is 98% owned by institutions. And they had a drop recently of about 1.35%. So institution seems to like Fox A quite a bit. Their sales numbers were about 4.9% this year and very close 4.0% for next year overall. So some different sales numbers as well. But overall, I found all three of these companies to be somewhat similar in certain areas.
Gotcha. So, all right, three stocks from the communications sector. Obviously, Fox A and Viacom, much more similar to each other than Comcast, but very similarities. There's some similarities between all three. Obviously, Comcast still has their cable networks as well. Let's play the game. You know, buy one, hold one, dump one. Matt, you're first, man. What do you got here? Where's your head at?
Well, looking at them from a fundamental perspective. How I would personally rank them from a fundamental perspective, and I analyze all these for the Tackle 25 every year, and I would personally rank them, Viacom and Comcast, fairly similar fundamentally. Before the year started, obviously Viacom's been caught up in a lot of the volatility of that hedge fund, but even today I would consider them both fairly equal fundamentally. I really like Viacom I think I like Viacom more from a potential growth perspective, as they establish themselves in the streaming wars, versus Comcast more as like, I see Comcast as a very safety type thing, capture your dividend, write some covered calls, very consistent. And so I'm going to go ahead and go hold on Comcast. I think it's the one where you're just like, yeah, I don't care. I'll just write covered calls and capture my dividend and, compound gains for the next 10, 15, 20 years. If you're looking at accumulating one, you are debating, in my opinion, Fox versus Viacom. And when you look at these, and they're both similar, but I will go with Viacom. So I'm going to go with the buy on Viacom. And specifically on Viacom, I see something technically. And when we're doing this type of game, I mean, you're talking about picking up a stock for covered call purposes, correct? Okay. You're not talking about picking up a stock for, hey, listen, let's buy the breakout at 42 and we're going to sell it at 45, right?
No, it's not a swing trade game.
So I do think you could very easily pick up shares of Viacom, write covered calls against Viacom as long as it stays underneath the 50-day moving average. When you look at the last four tests of that 50-day moving average, you see it get just hold. You close above the 50, you open up that risk graph and let it fly. I like that scenario on Viacom. You also have some on both Viacom and Fox. They're both in some degree of neutrality. You got that very important weekly support level that has been solidified multiple different times right there at 38.5 as well. Stop loss placement, if you get concerned at all, you can get out of the position underneath 38.5, because if you break 38.5, and I'm talking about a weekly close underneath 38.5, it could be look out below a little bit. There's no doubt about that. There's a reason it's stuck in mud. There's a reason it's underperforming the market. But I like the management techniques on Viacom. So I'm going to go with the buy on Viacom, the sell on Fox, and the hold on Comcast.
Mark.
My reasons might be a little. God, you're splitting a lot of hairs here. You could make a case, right? I don't think there's any bad apples here. I'm going to go the buy on Viacom. It recently, first of all, I think you can make a case fundamentally. And once I like this. I do like the free cash flow on Comcast, but if I could buy two, I would say buy two, hold one. I like all three companies, but I don't want a lot of communications. I like the catalyst on Viacom. And when I look at institutional ownership, I also look at it a little bit different. The decline in institutional ownership makes sense to me. Fallout from market ghost volatility. Some people shy away from that. I look at institutional ownership maybe a little bit differently. That there's room for it to go up. Plus, I think there's catalyst on Viacom from, they've expanded Paramount Plus into foreign markets. I think it has some growth potential. I think there's just some genuine growth here. When you look at the sales growth, once again, a huge metric for me. I want to see revenue. I'm not really a top line guy. I want to see that revenue, and I want to see that revenue sustainable. Go ahead.
Can I ask you a question on Viacom? Because you mentioned growth out of these three companies. Do you feel like Viacom out of these three has the most potential as like a Netflix type growth?
Yeah, well, and that's always a wild card, right? And I like those bonus wild cards. So
because I don't see the same amount of like Fox. Not that type of growth potential.
So when I look, because once again, if I was looking for stability, I like Comcast a lot.
Well, that's why Comcast.
But I think I get that stability in Viacom. I think I get, to some degree, that stability in Fox at reasonable PE ratios, dividend. But I also think I have a growth kicker, which is why, like in my own personal watch list of 100 stocks, I watch Viacom's on there for some of these reasons. It is my communication, like little in this specific area of the market. So I think the growth potential is there. I think the fundamentals are just fine. All three of them seemed healthy percentage-wise on liabilities versus assets. I didn't have those numbers. Hadn't looked at those recently. I love the free cash flow on Comcast. Like if you just wanted stability, boring, treats you well, I don't think you could go wrong with Comcast. And so that's going to be my hold. I am a buyer on Viacom, especially if I get a technical signal out of this range. That's a go. I've been waiting for 4 months now for that to occur. Got all kinds of million weekly moving. I got a million layers of stuff to fight through. But, I'm a buy on Viacom, cash flow in between. And Fox, I got to kick one out of bed. So, Fox, you're my sell due to no fault of your own. Just the other two are better for me.
So you guys agree. Okay. And I think the analysis here has been good, guys. And this is a fun one here, Greg. I like three stocks from this communication sector, breaking them down. What's interesting, and what was the asset to liability number you gave on Comcast early, Greg? Like
274
to 182.
274. That's because they own all the land and the theme parks. I mean, they have different business interests than these other two types of companies. Comcast is more of a traditional dividend payer. The dividend was not the tiebreaker for me on any of these, by the way. The fact that it's 1.4%, 1.3% on the other two, I see those as growth and covered call opportunities. You can pick up 2% on covered calls on both Fox and Viacom. There's a reason why Viacom did make a covered call list earlier in the year. It's a great optionable stock. Comcast pays you about 1.4%, 1.5% on a covered call. They're liquid. They're fine. You add the dividend in there. I don't think anybody's going to fault it. With just the nature of their business models, Viacom to me is the buy down here. I mean, and one thing I like about the chart, Matt, is that where it's holding this long-term weekly range is exactly like you pointed out, where it came down from when we had that Archegos capital management implosion earlier in the year. After that liquidation and all that institutional disownership where they had forcibly had to get rid of their stocks, it's held that range all year long. Okay. It's got some interesting technicals that are developing. That's true, but it still is a wonderful covered call stock, over 2%. It's held a stable range and you know where the floor is. So Viacom's the buy. I'm going to dump Comcast and I'm going to buy Fox A. Digital assets, I think there's more growth opportunity with Fox A. I like the fact that it's also been neutral and I think it's a wonderful covered call. So Viacom for me is a buy, Fox A is a hold. I will get rid of Comcast just because I don't trust the theme park scenario moving forward, maybe in another quarter. I know the trend is better on Comcast. I'll admit that right now, but I'm buying Viacom, holding Fox, selling Comcast.
You've just had terrible customer service from Comcast, like all of us, right?
I might be biased, sure.
The worst customer service in the planet.
I'm here in Canada. All our same providers are just as bad as yours. Believe me. Believe me. They're Bell, Rogers. They're all terrible. So
gotcha.
Anyway.
I think it's the number one complaining around the world.
Whoever
the internet provider is. Yeah,
I agree.
100%.
Yeah.
Greg,
internet or cable. So
what did we get right, Greg? What did we get wrong?
So I loved a lot of the points you guys came up with. This comes down to me to what you're looking for. And like I said, there's a few surprises in here. What I look at when I just FYI here, when I look at assets versus liabilities, and I know you made this point, Tim, 274 versus 182, they own a lot more stuff. To me, it's that spread that makes the difference, right? So if we look at the spread between these, so 23 and 11 is 12, 32, I gotta pull that up there, 52 and 36, or what are we there, 14, 16 there. And then we look at here, we're 100, well, we're 90 something spread, 90 billion spread. So it's that spread that to me makes all the difference in the world. From that fundamental metric, right? So you close the businesses down, get rid of the assets and the liabilities. Comcast's still sitting there with $90 billion, right? Plus their boatloads of free cash flow. So from a stability standpoint, those are kind of two that I look at. Having said that, one of the other things that kind of overrides this for me is I'm all about collecting cash flow, and I'm all about owning stocks for free and as quick as possible. So obviously, Viacom has the biggest dividend yield. They have the biggest covered call yield, whether you go out of the money or, as I did here, at the money. The institutional ownership is still in a position that I'm okay with. If that institutional ownership was below 50% or something like that, that might give me a little bit more pause. I'm not too concerned that the 16%, like you said, that could be attributed to a hedge fund implosion or whatever. So not really concerned about that. I don't mind the sideways action of the technicals either. I think Viacom gives you a very good opportunity, especially from an investor type standpoint. The other part of that is I look at the sales growth. Their sales growth is very solid, right? 11% this year, 3.5% next year. I still think that's very solid, right? It wasn't as good as Comcast, obviously, but still in the ballpark there. The only thing that really concerns me is the dividend increases there. Obviously, I like to see that a little bit more stable. They've only got the 1 year there. Comcast got 12. Anyway, Viacom, long story short, Viacom's my buy. Fox A, because of I like their dividend yield is okay. I really like their covered call, yield as well. I do like the fact that institutions own 98% of this. That does give me a warm, fuzzy feeling. The only problem I have with it is that zero dividend increases kind of scares me a little bit. I prefer companies that keep continually rewarding their shareholders, and it's not been the case for Fox A. So for me, I'm going to dump Fox A. I'm going to hold Comcast. Again, just they're the juggernaut. They're something I can count on. Even if I only get 1%, covered call each month and a 1.5% dividend, that's still going to get me what I want. They're going to be able to weather, any storms. 14 billion in cash flow. That's big for a company of this magnitude. So I like that. Plus, they've got their growth component there, which is good, and everything else kind of lines up. So buy Viacom, sell Fox A, and hold Comcast for me.
Thank you, Greg.
I got a question for Matt. All right, so I've been following, like I said, Viacom for months. Cash flowing here and there. Spot checking here. Then I'll move in and out of it. What do you think is because I always look for all right, I need to buy shares and go long. What's your where would that point be on the technical chart?
If you're looking at picking up shares for cover call purposes?
No, I have this, because I'll go back and forth, sell aggressive cover calls, sell naked puts, go back and forth, done that for Viacom several times in the last several months. But I'm buying shares for positional, low delta now, covered call, that liftoff signal from a momentum.
If you're looking for the liftoff signal, I'm looking at two things. Number one, three things, okay? Aggressive, moderate, and then watch out above. Okay. The reclaiming of the 20 weekly coincides with the 50 daily. You see this on the daily chart here. Let's zoom in. See that? You get a close above that 50, that could be a catalyst, and you could see some algorithms play ball there. That's number one, but that would be extremely aggressive. When you look at the weekly chart, you see the 200-day moving average right there at 42.5. You come back out to the daily chart. 42.5 is right there. You see that coincide with resistance here, here, and here. So you can't see it on the daily chart because it's over here, but the weekly chart does look at 42.5. And then ultimately you have the 200-day daily, which coincides with the previous horizontal pivot right there at 46.5. Ultimately, though, we're talking about weekly confirmation, that's 46.5. Everything else between the 50-day break here, 42.5 there, those are all daily type actions within an overall neutral trend. The neutral trend gets blasted and changes when you break back above the 200-day. And so ultimately, you're looking at it reclaiming the top end of the channel. I think, though, you're perfectly fine picking up shares, writing covered calls now, and then adjusting the covered call to a more lower delta as it does achieve breaking some of these technical areas. Mark, does that help?
I think that is a fine plan.
Fantastic. Appreciate the question, the answer there. Awesome. Fun segment there, Greg. As always, we like that, but that's going to start moving us towards the end of our show here and getting some final thoughts. First from you, Mark, programming notes at Tackle Trading here for the rest of the day.
Theta Thursday. I just love it. I'm sorry, I'm not.
The Cash Flow Vikings, the Cash Flow Club.
Theta Thursday.
Theta Thursday, yes.
Listen, Cash Flow Vikings, hold my trading lab. I've been a little bit sick this week, but I'm ready and rocking to go. Going to break down, A to B. I got a methodology, a checklist I go through every week. Going to share everything, from that methodology standpoint I'm doing in the Cash Flow Vikings. God, I like Viacom. Smells like cash when I look at that chart. And then Gino, the great Gino Poor, Thursday night, Cash Flow Club. And I don't know what Gino's going to talk about tonight, but I know it will be interesting. I know it will be illuminating. Gino has just a wealth of cash flow knowledge from his, I've been saying 20 years. It might be going on 25 years now in the market. I got to get an update on the calendar. He's been around a long
23.
time. Yeah, so I got to update the 20 in my to getting close to that quarter century. Anyways, he's been around a long time, doing a master of cash flow, all kinds of different strategies. And young Gregory there had an interesting cash flow strategy on Tesla, a little butterfly action on Trade Masters last night. So if you didn't see that, go check out Trade Masters on YouTube.
Yes, a replay. Greg, final thoughts.
I think we're all waiting for the Fed, and I think patience is key here. That's exactly what I'm doing. I haven't really done much in the last couple of days. As Mark and I talked about pre-production there, I've got my usual suspects of trades on, just kind of waiting to see what the Fed's going to talk about. Let the market kind of digest that, and then do what we always do. Look for your swing trades, keep your position and your investments intact. And speculate with a small percentage of your portfolio.
I love Greg and I's conversation pre-production. What'd you do this week? Not much. We're waiting for the Fed. What are you doing? Not much.
Cash flowing as you're waiting.
You got your existing positions and working them, waiting for that next trigger.
Sure.
That's right.
Matt, final thoughts for the team.
We were talking about communications and specifically the entertainment industry within comms, talking about Viacom, Fox, talking about Comcast from a longer term perspective, cash flow, covered calls, investment, that type of analysis. But, I was looking in the entertainment section a little bit today, and I saw a couple stocks that were very interesting from a directional perspective, short-term swing trading perspective. Liberty here, LBRDA, nice little high base for me. Look at that 90 MA catch up to it. We do not like 5 symbols to tackle trading. It is subjective, but LBRA Liberty, nice little high base, consistent technical formation in Liberty setting up. Keep an eye on that one. And then the second one, Charter Communications, CHTR, also setting up in a very attractive $800 high base breakout scenario there as well, with the top end of the wick right around 802. So So while we debate some of the bottoming action in Fox and in Viacom and, the cash flow strategies and longer term analysis, you do have some good little swing trades happening as communications itself fights up against an all-time high breakout as well. Going to be some volatility the next 2 days, guys, outside of trading. Obviously, this situation in Afghanistan is heating up here. Just honestly, thoughts, prayers, everything goes to everybody over there that is dealing with anything in Afghanistan and Kabul right now. Hopefully that ends out much better than it's going earlier today. So thoughts, prayers, and just stay safe. Everybody, American troops, American civilians, people that have helped us in that 2-decade war, our international partners, just for the love of everything holy, stay safe.
Yeah, all of our
Stay
heads
safe.
are there right now. I appreciate you bringing that up. All right, guys, that is our show here for a Thursday. Matt, great job today. Mark, great job. Greg, appreciate you as always coming in, and great job from you as well. We're done for today. If you are not yet a member of our community, there's a 15-day trial link to our pro membership in the description of every one of our YouTube videos, or you can always head over to tackletrading.com, join right from the store tab. Till then, we will see everybody tomorrow. Same